So among the laws that President William Ruto signed last week was the Virtual Asset Providers Act 2025. It had gone through Parliament. At the point when it was going through Parliament and discussions in Parliament, we actually invited people to come and explain that to us. And these are people from the Virtual Assets Chamber. Now that the bill is now law and it's now set to be operationalized, we need to understand what this is, because the others we have been making noise about the other laws. Oh, why did he sign this one? The Land Act.
What are we privatizing?
Privatizing. But this one of virtual assets, people just interact with it virtually.
Crickets, yeah.
People are just quiet. So what are virtual assets? We have invited Allan Kakai. He is a director at the Virtual Assets Chamber to take us through this. Allan, karibu sana.
Thank you very much. Thank you very much for the invite.
It's a lot to seek to understand, and please take us slowly. So, and I hope, well, they're virtual, so you couldn't have come with them. And that's point number one. First, Mariam.
I was talking about how to understand the new land amendment laws. Would you have asked him to come with a piece of land?
With title deed.
Okay. Oh, fair. That's fair. I have a quote for you today. I'll share it with you. You tell me what it says to you, if it speaks anything. Usually Janet is the one who gives the quotes, but I'm holding fort for her. She's mountain climbing. She's been in the Himalayas for about a week. All right. Quote, "You can't pour from an empty cup, but you can refill it with purpose." You can't pour from an empty cup, but you can refill it with purpose. This was said by Zainab Salbi. She is an Iraqi and American woman who was speaking at the Women for Women International Global Conference in 2019 in London. What does that quote say to you?
You can't pour from an empty cup, but you can refill an empty cup.
You can refill it, yes, with purpose.
With purpose. That's interesting. But from my perspective of, number one, if I'm pouring from an empty cup, it means I'm the holder of the empty cup. Now, refilling it with purpose, where do I find the purpose? Begs the question, where do I harness or get this purpose?
That's a great question.
Because if the cup is not filled, it's already empty. Where am I getting
the purpose to refill said cup?
Yeah. From within you, from within you. Search within you. Find purpose to refill the empty cup.
So the cup is empty, but I have to channel purpose.
Yes. Basically. I think that, the answer to the empty cup is the purpose. Maybe the cup is empty because you're lacking purpose in this situation. I know you're a very practical guy. The work that you deal with is very practical, but I guarantee you the way you're feeling about the vagueness of that quote is how a lot of people feel about virtual assets. They're like, what is this thing I can't touch, I can't feel? They tell me I own it. They tell me it's inenda juu, inenda chini. What is a virtual asset, Allan?
Yeah, so interestingly about that is that virtual assets are what conventionally were known as cryptocurrencies. So if you put cryptocurrency, the word cryptocurrency in a suit and tie to look good in front of the central bank and the capital markets authority, you call them virtual assets. And you'd understand why the central bank would not want to call them cryptocurrencies. Because the word currency almost poses a threat to the sovereignty of the Kenyan shilling. So a lot of Kenyans participate in this space. So cryptocurrencies, the most famous one is Bitcoin. But there's Ethereum and there's others. And a lot of Kenyans are very familiar with it, and they actively participate in this market to the extent that Kenya is usually top 3 in Africa, leading alongside Nigeria and South Africa in terms of consumption of virtual assets. Right. And globally, Kenya is usually top 20. So the question now becomes why do Kenyans participate in virtual assets and what do they use them for? One of the biggest volumes around virtual assets most recently has been around a virtual assets category called, for instance, stablecoins. Stablecoins are basically digital dollars. So the same way you hold USD on your bank app is the same way you can hold stablecoins on your crypto wallet. So one of those people who will be regulated under the Act. And the reason why people would go for stablecoins, as you understand, is because Kenya is heavily an import market, and all these imports and exports are heavily dollarized.
Yes.
So over time, you could find affordable dollar rates within the virtual asset space. So they'll provide you more affordable dollar rates, or the supplier you want to settle with can only accept digital dollars. So what it revolutionized is it really enabled cross-border trade in a way never seen before, because transactions on the blockchain, for instance, are instant, T+0, as opposed to other transactions in conventional banking sectors where you'd wait up to 3 days for that. So that was the biggest use case, and the most recent Chain Analysis report indicated that Kenya transacted over close to 3 billion Kenyan shillings in stablecoins last year alone.
What?
That's why Kenya is, so all this is mostly
3 billion. So when you say
3 billion USD.
3 billion USD
Yes.
equivalent of stable.
Yeah.
Okay.
So that has been the primary use of virtual assets locally and even globally.
Okay. Sorry, I was going to ask layman's question. This is a 101 class. Is a stable coin a digital dollar?
A stable coin is an equivalent of, it's a digital dollar. The closest example you can use for Kenyans is M-Pesa. When you're holding M-Pesa on your M-Pesa wallet, you are literally holding Kenya shillings. You just don't have it physically, but it's Kenya shillings that you can send that M-Pesa to your mom, to your dad, or to your friends. You can use that to buy goods. So that is the equivalent of a stable coin. So a stable coin is the equivalent of a digital dollar.
You see now, with that money in my M-Pesa or my mobile money wallet, it's equivalent to the fiat 1-for-1.
Yes.
Right? Is that the same thing with the stable coin?
Yes.
Would you say that one stable coin equals $1?
Yeah, and let me do you one better. So
Okay.
M-Pesa is equivalent to your fiat 1-to-1,
Yes.
and you're always guaranteed that all M-Pesa circulating in Kenya, Safaricom is holding it at NCBA Bank or their partner banks. So if the total number of money in M-Pesa is, let's say, 100 billion Kenyan shillings in everyone's funds, it means that in a bank somewhere,
There's 100 billion.
there's 100 billion. And that is why agents run out of float and they have to deposit back in the bank and all that. So for the stable coins, and the regulations have been developed globally to ensure that, a case in point being the markets and crypto asset regulation in Europe and the US. So the biggest stable coin issuers, for instance, like Circle, have an equivalent cash reserve or government bonds backing that. So for instance, if USDC, which is one of the biggest stablecoins, Circle, say that they have $70 billion in circulation. It means in a US bank account somewhere, they have an equivalent to that $70 billion in cash reserves. Or they hold US treasury bonds, long-term or short-term treasury bonds, worth $70 billion.
Okay.
So what I'm using is a digital dollar that is built on that. The same way the M-Pesa you interact with is built on a reserve that Safaricom holds.
Okay. So this one I can clearly see now. Stablecoin is basically one that is digitizing the fiat money for ease of trade, for ease of transaction, for ease of liquidation as well, right?
Exactly.
So I'm working with my stablecoins. I can go and cash in for dollars. Same thing that I do with my shilling in my mobile wallet. Now, these other cryptos, things.
Well, that's why we started with stablecoins, because the other
They're
ones.
easier.
It was easy to understand.
Easy to understand.
Thank you very much.
Yeah.
So the other cryptocurrencies like Bitcoin, Ethereum, and Solana, and so on, some of them, number one, are usually more speculative, but number two, they are designed to provide use case within the blockchain technology infrastructure. So I'll give an example of Ethereum. Ethereum is one of the biggest L1 protocols, and a lot of...
Don't just say L1 protocol casually, please.
Okay. So for you to enable transactions on the blockchain, for instance, stablecoins, money needs to move across certain networks, right? If I'm sending you money on M-Pesa, both of us need to be what? On Safaricom network.
Yes.
Safaricom network is a centralized network owned by Safaricom. But you can't send M-Pesa to someone in China because they don't have a Safaricom line and they are not on Safaricom network, right? So blockchain has enabled people to build networks that allow that interoperability of financial transactions. So for instance, the reason why you are able to send stablecoins to someone in China is because people have built networks on the blockchain that allow you to send that. So, and one example now of the networks is Ethereum. So if I'm holding a stablecoin on the Ethereum network, I can send it to anyone across the world who has access to that network. So that means that if we were to allow somebody in China to receive M-Pesa as it is, it means we need to take it out of the Safaricom network and deploy the M-Pesa solution on like a blockchain network like Ethereum or Bez or Polygon, and it allows for them to send and receive. And now you understand now the use case for cross-border and limitless use. So because people build solutions like that, there's various incentives that come with that. So most of the time, a lot of the top 10 trading crypto assets are crypto assets that are tokens of these networks. Tokens in the sense of transaction fees, or it is a way for them to fundraise. So if I'm transacting, for instance, on Ethereum network, I pay transaction fees in the Ethereum currency. So this is where speculators come in, because speculators speculate that this Ethereum network will do so well, they will hold a lot of it. The same way people who believe and understand Safaricom does so well will buy shares in Safaricom
at the stock
markets. So that is the second use case. You'd find that because people who understand the specific use case and utility of some of these assets choose to participate and speculate in them, and that is now which makes the second biggest market trading.
So if I were to buy Ethereum, what am I buying? Am I buying the currency, or am I buying a share into the network? Because
that's actually a great question.
You've mentioned here, Safaricom, I'll go to the NSE and buy because I think, this mobile network has done ABCD. If Airtel were to list as well, I'd be looking at Airtel fundamentals and so on and so forth. Now with Ethereum, the people who say, I have Ethereum, what have they bought?
So they are holding that virtual asset on their wallet
They're
called
holding
Ethereum.
What are they holding?
They're holding Ethereum, ETH.
Yeah. Which is like now the coin.
Which is the coin of the Ethereum network. This means that as a holder of Ethereum, if the network is doing so well and the value of the network goes up, if you bought the coin at $10, it could go up because the value of the network has gone up. Number two,
the value of the network being the number of transactions?
Yes, exactly. The engagement, the number of transactions, how much revenue is being processed to the network, and all other market forces.
It's very similar
to... So it's coin and share at the same time?
Yes. The only difference is you would not use share because share is almost...
own.
No, I was about to say, very similar to speculating on currency. On the value of currency. But go on.
Or very similar to speculating on the value of, I think, shares in the stock market.
Shares in the stock market is more accurate.
Because you watch the fluctuations based on the fundamentals.
Yes, based on, that actually makes more sense.
Okay. So that's it when you hold that. That's a virtual asset?
That's a virtual asset.
So when I have that Ethereum, I can call it an Ethereum. What do I call it?
Yeah, it's Ethereum.
When I own an Ethereum, I have a virtual asset.
Yes, you have a virtual asset.
When I have a stable coin, I have a virtual asset.
You have virtual assets.
Those are two. What's the other? Any other virtual asset?
And the example is Bitcoin.
Which is like Ethereum.
Which is like Ethereum.
It's another virtual asset.
It's another virtual asset.
Okay.
And there's another class of
them.
There's so many. There's the one that took the world by storm a while back, like 2 years ago. I think the NFTs that came and went. What was I think we saw NFT, but just explain to us.
The non-fungible tokens use case was interesting, and the one you specifically mentioned that came and went was the use of NFTs in art and the music industry.
Yes.
Because one thing about art is art usually has sentimental and unique value. So an NFT, an unfungible token, allowed people to digitize art and only make one of one. So NFT means that there's only one of that. You can't trade it for any other. So,
like the way you have only one Mona Lisa.
Yes, like the way you only have one Mona Lisa.
Okay.
You can't swap one Mona Lisa for another Mona Lisa. Yeah. And unlike other virtual assets that are fungible, you can always swap one stablecoin for another stablecoin. But an NFT, there's always one of one. So, given how that technology was designed, it made a very interesting use case for the art sector. So this is around 2022, 2023. A lot of artists were creating digital NFTs, digital art, and making them NFTs, and a lot of musicians were also launching them as albums.
Yes.
Yeah, but the bubble was inflated so much that it busted. A lot of that NFT hype, specifically in the art sector, toned down. But now we have seen that technology being transitioned into now more solid use cases like real estate. For instance, he mentioned the title deed. You've heard of people trying to build blockchain solutions for land to curb corruption and just ensure transparency and all that. Now they use the same technology. A title deed, you can only have one of one. So for you to ensure that transparency and auditability, you deploy it on that NFT technology. The same way you can have one of one in a Mona Lisa, the same way you can have one of one in a title deed. The technology NFT enables that.
Okay. I think, that makes a lot of sense, especially for a country like us. And it's no longer enough to just go to, the land registry. It's never enough. There's never enough homework. But if there was truly only one title deed, right, that can only be transferred, not copied, then I think we'd move forward. I'm thinking through virtual assets now and real life use cases. Let me begin with the speculative nature of some of the coins and cryptocurrencies. Bitcoin being the most speculative, right? You could be a billionaire and then maybe 100 millionaire, and then a billionaire and then maybe 100 millionaire. Why that level of speculation as far as some coins are concerned, and why are others fairly stable?
And why such volatility?
Yeah. And leave alone the stable coins that are, pegged to something. But yes, within these other coins, why the volatility?
Interestingly, for instance, a Bitcoin.
Tell us how much one Bitcoin is worth right now. If you had one full Bitcoin, if there's such a thing.
Right now, one full Bitcoin is about $112,000.
There you
so
go.
Close to 15 million Kenyan shillings. But interestingly, 3 years ago, in 2023, around mid-2023, one Bitcoin was $19,000. So if you bought one Bitcoin at 19K, right now,
yeah, I'm just. Are you looking at what asset, Eric? Do you know that could appreciate like that in 3 years?
That's great.
Almost 5 times. No, 5 times, 5-6 times in 3 years.
It's great.
Right? But go on. So why explain that growth in value 5 times in 3 years.
Now, also, the beauty is that you don't need to own one Bitcoin before expanding.
Yes.
You can own 0.00 something.
Yes.
So the growth of value with Bitcoin and a lot of other speculative assets usually come in, for instance, the basic laws of supply and demand. Now, with Bitcoin specifically, the reason why it shot that high is that because as regulations became more clear across the globe, which we've seen in the US, in Europe, and so on, these assets started receiving a lot of institutional interest, in the sense that big hedge funds, pension funds, investment funds like BlackRock started participating in the market. Now, if BlackRock woke up in the morning and said they want to buy $2 billion worth of Bitcoin, it means based on the laws of supply and demand,
the price is going to shoot up.
And the price is, exactly. So because of that overwhelming demand, it allowed for Bitcoin to rise, and holders of Bitcoin realized a lot of profit over that. The other reason why some of these things now rise and fall, Now, apart from Bitcoin being a case example, because of institutional adoption, is the crypto market has also allowed people to express sentiment, passion, emotion, and everything good. So, for instance, I'll give an example of President Trump, the US president. When he was running for his presidential election, he launched his own token called Trumpcoin. Now, if you love him so much and you believe in him so much, you'd want to participate in Trumpcoin. But whether or not you love him and you realize objectively this guy is good and his fans love him, you'd still want to
get in on
participate
that coin
in the market. So because of also that emotion, which means when people love him, the value of Trump coin
demand goes up,
but when
sentiment goes up,
when things are shaky,
it comes down.
Let's
take a break. 29 minutes after 7. We are seeking to understand the virtual assets in this country, because there's a new law, the Virtual Asset Service Providers Law, that was signed last week. It's now operational. So we have Allan Kakai from the Virtual Assets Chamber to explain to us what that law means, what virtual assets are, and how we can participate in it, how it benefits us. We'll be back in a moment after this break. Fixed. Today we are discussing the Virtual Asset Service Providers Act, which was signed into law last week by the President. And I'm looking at this law. I want to start with some of the definitions in law, and then come into what the objects of this law are. It says the virtual asset is a digital representation of value that can be digitally traded or transferred and can be used for payment or investment purposes, and does not include digital representation of fiat currencies, securities, and other financial assets. So M-Pesa, money in your M-Pesa wallet is not a virtual asset. Okay. Then a virtual asset service means the virtual asset services listed in a schedule of this act. Virtual asset service provider is a company licensed under this act to carry on the business of virtual asset services. Then we come into the main object of this act is to provide for the legislative framework to license and regulate the activities of virtual asset service providers in and from Kenya. It shall apply to virtual service providers offering virtual asset services in Kenya, shall not apply to things like you've just said, non-exchangeable fiat, solely if you have issued digital representation of value or rights that operate only within a closed ecosystem and does not get out of that ecosystem, that does not apply in this law, and so on and so forth. So this law is doing very many things, but I think the first thing is that it's regulating service providers in the virtual asset space. So who are those service providers? And as you answer that, there are some questions here. For example, Mariam Wambo is asking, Miriam, can you name one or two virtual asset providers? And Jesse is responding to her and saying, you can register as one with the Register of Companies, with the CBK, the Competition Authority, and other players, and so on and so forth. Molimo Paul Minor is asking, in virtual assets, do you trade with any other currency other than the US dollar, like the euro, the real? Can you lose virtual assets in any way? So let's start with, who are these service providers in this country, and what service are they providing?
Yeah, that's a very good question. So virtual asset service providers, now that you understand what Bitcoin is and what stablecoins are and what Ethereum is, you need interfaces or mobile apps or websites that allow you interact with these products. So either you have a mobile app similar to your M-Pesa app that allows you to store and hold your Bitcoin, or you have an exchange platform that allows you to trade, because we talked about trading and speculate. So one of, it already leads us to two examples of virtual assets. Number one, wallet providers, so virtual assets, wallets. And number two, you have virtual asset exchanges. Like for instance, Binance is one of the biggest exchanges globally and has been operating in Kenya. Number three, stablecoin issuers, for instance, are also listed as virtual asset service providers. A good case example of a stablecoin issuers is USDC. So you'd find that a lot of stablecoin issue USD, then the name of the company. So USDC is issued by Circle. So those are high-level example of global virtual assets
service providers.
Okay. We also have locally founded companies that are within the virtual asset space. For instance, you have a company like Kotani Pay, that allows people convert their Kenyan shillings directly to virtual assets and vice versa. Yeah.
So
which
I can use the
answers one of the
shilling
questions,
on this platform of Kina. What was it? Kotani.
Kotani Pay, yeah.
I can use my shillings to buy a Bitcoin.
Yes.
And I can then also convert from Bitcoin to shilling.
Back to
using
shillings,
this,
yes. So
using
they
this.
provide liquidity and rails to enable that.
Okay.
So that is an example of virtual asset service provider. So those are the kind of people who will be required to obtain licenses under this act.
So they'll obtain licenses from whom? What kind of licensing will be there?
So based on the wording of the act is these two regulators. So there's the Central Bank of Kenya and there's the Capital Markets Authority. And the reason for that, based on our conversation for the last 30 minutes, is you understand that the use case for these virtual assets play sometimes almost a payment role, like stablecoins example, or play a trading and speculative role. Now, you understand that the Central Bank of Kenya conventionally regulates people who almost do payment-like businesses, the likes of M-Pesa, payment service providers, remittance companies. So virtual assets service providers that are building solutions that are payment-like solutions would usually end up in the Central Bank of Kenya. So an example, if somebody, the stablecoin example, if somebody allowed me to use stablecoins to settle an importer in China or a supplier in China, that person would be licensed by the Central Bank of Kenya, the same way remittance service provider is licensed by the CBK.
Right.
But if somebody created a platform for trading and listing of cryptocurrencies or virtual assets and allows people to log in and trade, similar to how people trade in the Nairobi Securities Exchange, that person will be regulated by the Capital Markets Authority. Yeah.
Okay. Yeah. So then this regulation, this act provides for these regulations. Again, we're only the third country in Africa to have regulations like this, and still leading, you know, from the front in a lot of in a sense of the word. What are some of the things within this act that you think would enable even, you know, a bigger entry into the world of virtual assets for Kenyans and even for, I think, foreigners operating in Kenya and for the world, to be honest?
Yeah, that's a very interesting question, and goes back to how we started this conversation early on. In sometimes when a government decides to pass a new regulation, especially in the tech space, there's usually worry on, is this a progressive regulation?
Right.
Or is this meant to control and shock the industry?
They say innovation outpaces regulation. Yes. Yeah.
But for this example specifically, it's exciting for the industry. And Kenya being one of the top 3 countries in terms of virtual assets adoption, it's by far one of the best pieces of legislation this sector can have. And you can imagine the impact it has in East and Central Africa, because Kenya is the Silicon Savannah. That means a lot of products that will obtain these licenses will be used across Uganda, Tanzania, Rwanda. So we are looking at products that will affect up to 200 million people in population. So yes, it's an interesting and exciting regulation. Now, the key bits about this regulation that make it interesting and will open it up for businesses, for instance, for a long time, since 2015, the Central Bank of Kenya had issued a cautionary notice that restricted banks from directly providing banking services or interacting with crypto companies, virtual asset service providers.
Okay.
So that means that a lot of traders who are buying and selling crypto, if the bank flagged that you're buying and selling crypto, you'd have your bank shut down. A lot of my friends have had their bank accounts shut down. I have had my bank account shut down several times. Because of that, you're being flagged that you're doing peer-to-peer trading. Now, with this regulation, that will stop.
Okay.
That means more adoption will go up. So that is the first pit stop. It allows to build a bridge between the virtual asset sector and the banking sector.
Right.
Now, of course, this means more business to banking sectors, because if you have global players coming to seek banking services from local banks, it will really bolster up our banking sector. So that is one very good piece about this. Number 2, foreign direct investment. So when sometimes investors or people who want to explore new markets are doing due diligence on our country, compliance risks or regulatory risk is usually one of the biggest risks in the due diligence questionnaire. And they're trying to figure out, if I launch a product in this country, will somebody unilaterally shut me down, or will there be a crackdown? Now, licensing almost mitigates this worry, because now the guarantee is that as long as I'm licensed,
Right.
then there's a clear path and there's a clear way of doing business.
Right.
And that means investors will have more confidence in investing in a lot of startups within this sector, or foreign companies will have more confidence in terms of coming to launch companies within this sector.
Yeah.
Yeah.
Those are some huge wins. And I like that you've said that this is one of the most progressive bills. That means we're moving in the right direction. I know there was a few more questions from YouTube, but just before we get to them, because time is also, it's really running out. When you think of the pitfalls, the potential pitfalls, a lot of the worry around virtual assets, cryptocurrency, is their use in crime and money laundering. How does this also fit into our agenda against anti-money laundering? I know it fits into that. And just basically, how does it also mitigate against the use of crypto and virtual assets in criminal undertakings? And I say that knowing that people use real cash in criminal dealings all the time, cold hard cash. It's so I don't know why we expect a super difference, but if we can regulate against it, have we?
So that's an interesting question, because one of the legislative intents of this bill was actually to also curb against money laundering through the virtual asset sector. You understand that Kenya right now is in the financial action
grey list,
tax force grey list, and one of the recommendations was to have clear regulations on virtual assets. So from the very onset, when the National Treasury was drafting this legislation, a lot of the recommendations from the Financial Action Task Force were backed into the provisions of this regulation. And as you go through it, you'll notice a lot of KYC, ML, and clauses are aligned around countering terrorism financing. And this includes things like requiring virtual asset service providers to KYC
What's
all
KYC?
the users.
Know your customer.
Yeah, know your customer. So basically, all users coming onto your platform need to provide their names and ID numbers and all that. So KYC is always the first entry to curbing ML. And then number two, because regulation was, because this sector was in the gray area before, virtual asset service providers were not recognized as reporting entities by the Financial Reporting Center, FRC. The same way banks can report and flag if you never bank, then you wake up one morning and start banking 100 million Kenyans. So that element of now that they're been formalized and recognized as players the same way players within the conventional financial and securities market sector have recognized, they almost have those reporting obligations that, again, align with the Financial Action Task Force recommendations. So that reporting obligation combined with the KYC obligations almost now mitigate some of these AML risks that one might say come with virtual assets.
AML being anti-money laundering. I know it's because it's off the top of my head, but I don't want our listeners and our viewers to get lost. Maswali ni mengi hapa YouTube. So, for example, someone is saying, I have Binance, but they say my country is not in their scope of operation. So is this something that can be fixed with this regulation? Things like that.
Which country are they in?
They're in Kenya. This is Miriam Wamboi. Yes. I know.
Okay,
yes.
So that is something that can be fixed with this regulation. Because interestingly, our friends and who have built startups, and sometimes even when they try to upload, because when you build a mobile app, you have to upload it on Google Play Store. Part of the requirements Google wants you to present is the licenses you get from your country. So this is something that this regulation can fix.
Good. So we talked about providers. Some of them are local.
Yes.
So local, it has been developed locally, registered locally, and therefore this company is now licensed locally. Those international ones that want to operate within Kenya, are they now required as well to acquire licenses in Kenya?
Yes, anybody providing...
So like you said, the wallet providers, the exchanges, the stablecoin issuers, all of them must also have a license to operate?
Yes. So operating in Kenya would mean you want to provide your app to Kenyan users. It means you want to put up a billboard on Thika Road, all that. So yeah, you'd need to obtain a Kenyan license if you have a foreign company and you want to directly engage and interact with Kenyan consumers. Yeah.
Okay. Is it possible for Kenyans to actually trade in virtual assets with using these international service providers without them having to register here? If they're not going to market and advertise and open an office in Kenya, but they are available virtually and you can access them.
Yeah, so one can make an argument of reverse solicitation whereby you expressly don't market to Kenyan users,
Right.
but they find a way of getting you. And I mean, this example can be picked from betting companies whereby there's some Eastern European betting companies that are not licensed in Kenya. But Kenyans find ways of getting to them. So yeah, it's possible for that. So one thing that will happen is either if the regulators are savvy enough, they would enforce, for instance, IP address blockers, whereby if you're not licensed in Kenya, then you...
but Kenyans were very bright. Small VPN. So I'm seeing regulation still, it's a catch-up game.
Yes.
There's a question.
But it's a two-way thing. Sorry. It's a two-way thing because you understand the motivation behind this regulation. The reason why I'm saying this is a progressive regulation is the motivation behind this regulation is also consumer protection.
Yeah.
It is designed to protect consumer. So if the consumer being protected just deliberately does not want
to use the protection provided, then said consumer. I think there was a question by Paul Miner who was asking, can you lose virtual assets in any way?
Yes.
Lose in
any way.
Like nimenunua my 0.001 Bitcoin, and I'm speculating.
So one day,
what do
lose, for example, I think let's look at the various other examples of these other conventional ways in which you can use your wealth. You have money in a bank, bank collapses, money goes. Your money in a circle collapses, money goes.
Good.
Right?
Let's start with that example actually. So before this regulation, if a virtual asset service provider or an exchange collapsed, yes, you'd lose your money. A case example is an exchange, an American exchange called FTX, collapsed with billions of dollars. That gentleman was jailed for up to, I think, 200 years in prison. Because countries like Kenya did not have clear virtual asset service providers regulations like this. Kenyans could not be redeemed or could not find ways of getting their money back. But countries like Japan, at that time, the Japanese authority had developed clear consumer protection regulation, which required the exchange to even have reserves locally. So whereas users in a lot of countries were losing money, Japanese users
were able to
got their money back because there was clear consumer protection regulation. So yes, if a company collapses right now that is not licensed and not within this regulation, and if your money there, there's a risk of losing.
Okay.
What does the law say in terms of licensing? Within how long should we have all the service providers licensed?
So from the day the act took effect, there's a 12-month moratorium. Basically, a moratorium is you have 12 months to figure out.
Grace period.
Yeah, exactly. 12 months to figure it out, put your house in order and apply for that license.
Okay.
So the first set of penalties or enforcement actions for people who are not licensed might start coming out around October, November next year or late last year.
Okay. Yeah. I'm hoping that also there will be, like if I go to the Capital Markets Authority website, I'll be able to see, the same way I can see who is licensed to, trade any other thing, I will be able to see virtual asset service providers there, right? And
yes.
same to the CBK.
Yes.
So that's good.
So correct. And on that point, very interesting.
Yeah.
If you've seen CMA licensed products or CBK licensed product, you already see a disclaimer at the bottom there. Or even the ads that are run on TV.
Licensed by the Capital Markets Authority. Yeah, exactly. It's always there.
So again, for the Kenyan consumer who is being protected and wants a safe place to interact with the virtual assets,
looking out for that.
That stamp of licensed by the CMA or licensed by the CBK will be a very good indicator of confidence.
That's really good. I'm liking the progressiveness of this bill. There's a question here asking, why is the virtual asset discussion focused on money and not the technology's potential to solve deep corruption, like securing Karura Forest's public land with an immutable title deed record? You spoke to that actually, but I want to see other use cases for virtual assets in solving corruption and some of our day-to-day problems that we may not be aware of. I think the land example is a really good one.
Yeah, the land example is a really good one. And the reason why this virtual assets bill doesn't, of course, focus on the technology is, again, the motivation was consumer protection and that use case in the financial and securities market sector. But virtual assets, blockchain use case does not start and end in the financial and securities market sector. People still use, for instance, blockchain in carbon credits. And as we gave an example, in building solutions that enable transparent, auditable land records. We already have private companies that use that. But because of how that solution is designed, you don't need a license for you to have a software that allows a landlord to manage their. So this act is designed for softwares or other mobile apps and websites that are collecting money from Kenyans and telling them, I'm going to put this money in Bitcoin and all that.
Okay.
So that doesn't take away from the fact that blockchain technology has various other possibilities.
Although even if they don't fall into this Virtual Asset Service Providers Act.
So it's technology versus use.
Well, use, yes.
So this one is on the use and not necessarily on tech itself.
Yes, on the tech itself.
So there are very many other things that we can do with the tech.
A lot.
Are we?
Are we doing other things with the tech?
Yeah, in this country?
Maybe someone might create a blockchain solution for voting in 2027. But
they're already on it. They are already on it. We've had them here actually. You're aware? Yes.
So let's
already
see
have that kind of solutions. Okay. So as your parting shot today, and somebody has just listened and they've had all this talk of virtual and virtual assets and trading and all, and you'd like to market people into, you're preaching to the non-converts to convert them into seeing that this is actually not something that is crazy. It is something, it's somewhere where you can invest and grow your wealth. What did you say in a minute?
My parting shot is we are almost at the cusp of the next edge of financial innovation. And this means that there's a lot of opportunity and there's a lot that needs to be learned. This act has opened up opportunities for innovators within the space to explore their wildest forms of innovation in terms of the possibility of what blockchain and virtual assets can do. So I'll urge any innovator and entrepreneur out there to reach for the skies. Because now that investors have seen this act, Kenya is number 3. Any app, mobile app or website that is doing this, a lot of investors will be interested in deploying capital for this. I'll urge people, for instance, in campus who are looking to upskill themselves, to at least try upskill themselves in this sector of blockchain. And by extent, AI, because tech is the next edge of evolution. With the billions of dollars coming into the country, there'll be massive employment opportunities. So entrepreneurs and young kids trying to get new skills, right now it's the right time to do it.
Thank you.
Allan Kakai is a fixer for the current and for the future. And thank you very much. Your passion and all just shows that you have deep understanding into this. And you can see the opportunities and where they lie. Thank you very much for fixing. He is from the Virtual Assets Chamber. He's been taking us through the new law on virtual asset service providers. Keep it here for more conversations. In the next hour, we talk to a commissioner with the Public Service Commission. Apparently, 30% of the people who are working in our public service have fake certificates, academic certificates. How so? And what's wrong with that? Back in a moment.